Welcome to the 2024 Economic Preparation in the Present channel. I'm your host, Tony. Thank you for joining me on this brief Friday edition, September 6, 2024. Please be sure to hit the subscribe button, hit that like button for me, please, as my subscribers have some of my subscribers have not been notified when a new video is out, so it really helps me hit that like button. Thank you for listening. We're going to be talking about the sluggish job report. We only added 142,000 jobs last month. That's below investors' expectations. That's below senior economists' expectations. And we're going to continue to see this as we head deeper into this third quarter of 2024 here. And ladies and gentlemen, things are not looking all that good, but what's all looking good is that we still are adding jobs and not a net zero economy, at least according to the numbers. Now, sluggish U.S. jobs report clears the way for Federal Reserve to cut interest rates. So now we got this lowering job market is cooling, and we got interest rates are coming down a little bit, and we also have the gas prices coming down a little bit. The AAA national average coming down a couple of cents here and there, obviously, as the elections get closer. But that's the good news. The bad news is that hiring by America's employers only picked up a little bit in August from July's tepid pace. Unemployment rate dipped for the first time since March. It's a sign that the job market may be cooling but remains sturdy. You and I know that the job market has been cooling since January, February, when the tech layoffs started, and that started to hurt the Dow Jones and the S&P 500. Now we've got hiring, laying off things here are starting to really pick up now. Like I said, I only added a modest 142,000 jobs. That's up from 89,000 jobs in July. Remember, these numbers have been revised downward. 2 or 3 weeks after these numbers come out, they're revised even more downward. So unemployment rate only ticked down 0.01% from 4.2 to 4.3%. So that's nothing to be too alarmed about. However, it's still remaining steady, just like inflation is remaining steady, hanging around that 4.55%. So it continues to be an issue here. The labor market is weakening, prices are still high, and the housing market is still high, and so that's not a good sign. When people can't find jobs, they can't find good housing, then that means that things are going to be in the contractionary measure. Even Americans who have money, making big time bucks in America, the top 1% or top 10% are not spending like they used to be spending here. So the good news is that you aren't likely to lose a job in the U.S. according to your ABCnews.com report, but you may find it harder to land one now. Now you're competing against, like I said, you're competing against not just the new college graduates and all that. You're competing against international talent. You're competing against, cheaper labor. You're competing against automation, AI, tech, algorithms, So by the time you actually get your resume in front of an actual person, that may be 2 or 3 rounds later. Most time this stuff is read by AI. They spin your resume through a computer, and it picks out keywords. And so you don't even get to speak to a person until the late interview stages now. And not 20 years ago, 25 years ago, 30 years ago, that wasn't the case. But now this is where we're at now with the American job market for the last couple of years here. So, and they talk about this guy who was laid off by Spotify last year, and now he thought it'd be a breeze to find another job because he was a software engineer. But now, looking back, it took him a long time, and now I've talked to a lot of my friends too. I'm sure you have too. It's taken them 6 to 8 months, sometimes even a year, to find a decent, good paying job. I mean, not just the ones you can the service and hospitality and transportation and utilities. So it takes about a year, 6 months to a year to find a decent job in any part of the country right now. And temporary staffing agencies have helped to try to fill the gap, but it's worldwide. And so people say, I'm moving out of the U.S., I'm going somewhere else. Okay, well, the Eurozone is experiencing weaker growth too. And not only them, Australia, outside of Asia, Africa, developing nations, BRICS, they're all experiencing a slowdown because the world economy is tied all together, even though we say it's separate. But the Eurozone economy, according to Wall Street Journal here, is weaker than previously expected, and they prepare to meet. And so it grew by just 2.02% in the second quarter from the first. So they're going to be expecting rate cuts here in Germany and the European Central Bank and the EU and all of that too as well. And you can see that we lead the way here in the debt clocks here. National debt's at $35 trillion and growing every minute. The next closest competitor is China with $14 trillion of debt. Japan, Germany, UK, and you can see India. All these guys are in heavy debt, but not as much as the USA. USA is double the debt of the next closest competitor here, more than double. And to top it off, our population is only 340, 335 million strong officially. China has 1.4 billion, so they have a lot more people to feed. Japan only has 129 million, but they have 13 trillion dollars in debt. So this debt load is a worldwide problem. Yes, all the economies are in massive debt, as you can see here. Some of the other countries faring better than in debt than others, like Portugal and Saudi Arabia and Russia. Their debt's a little bit more manageable. Even though it's pretty high, but it's manageable. We're talking 400 million, 300 million dollars of debt versus 35 trillion dollars of debt. The United States and China has 14 trillion. So you look at countries like even Brazil has $2 trillion of debt and high inflation. Argentina has $617 million, but they have high inflation. The currencies collapsed. The lira, Argentine pesos collapsed. So you're better off when you're saying you're going to live outside the United States. If for those purposes are doing that, retiring outside the United States, you better go in these countries that have lesser debt, like Switzerland, maybe Taiwan or Turkey, if you're into that kind of stuff. Or Portugal that has less debt than these countries up here in the top 5 or 6 here. France with heavy debt, India, UK, obviously. It's very hard to move out. So this one thing to think about if you are thinking about that. The debt continues to grow, but it's who's able to manage the debt versus how much they're bringing in taxes and the gross domestic product. And right now, it's starting to catch up to some of the big name countries here, as you can see. So this jobs report is going to continue to be sluggish. We predict that it will continue to be sluggish. We expect that gas will come down obviously before the elections, but then it's going to sharply rise up again after the elections in the wintertime as we go in the fourth quarter, and they're going to make everything look good. But then that's going to rise up, and then expect more outages here. We're going to have more internet outages, more phone outages. A lot of people have Verizon or AT&T saying that their phone outages will be out for like a day or something, and or just random go out. Let me know if you guys are noticing that with some of these companies or internet outages, or any kind of just like they had the planes, the outages with Delta and Southwest, maybe some things like that be coming on. A lot of black events related to hacking and stuff of that nature. Look out for that as we head more toward the election season. Let me know what you think in the comments. Thank you for listening. God bless. Have a great weekend, and please be sure to subscribe for this channel. Thank you very much.